Well, I would like to welcome everyone to Legal Business Entities. And we have Bill Hulsey, our resident expert at SCORE Boston. He's also our co-chair and he is a mentor for us as well. So I would like to tell you a little bit about SCORE in case you don't already know. There's a couple things that SCORE does for folks. One of them is training, which you are here today, so you know all about that. Another is we provide a website full of tons of fantastic information, templates and videos and presentations that you can download and watch or use to your benefit. The most important thing that SCORE does is mentoring. Mentoring is always free and is confidential. Our mentors are volunteers that come from lots of different backgrounds and have different experiences that they want to share to help folks. We work with those that are thinking about starting a business, are in the process of starting a business, or already are in business. We are still doing video and phone. We're starting to mix in a few in person, and hopefully that will start increasing over the next several months. The nice thing about SCORE is that it is a national organization. So if there's any reason why we aren't able to help you at the chapter or district level, we can go to that database to pull in other experts to help answer your questions. If you already have a mentor and it's been a while since you followed up with them, reach out to us, reach out to them. They want to hear from you. They want to know how things are going. Bounce new ideas or things that you're thinking about trying with your business. Keep that relationship moving forward. If you would like a mentor, there's several different ways you can do that. You can go to the websites listed on the screen, and I will put those in chat after my intro. You can put a note in chat and just say, hey, Teresa, get me a mentor, and I'll make sure that the right mentor in the right chapter reaches out to you to set up that appointment. Or you can send me an email, and I will also put my email address into the chat as well. So lots of options for that. We are going to utilize Q&A today. So if you have a question for the presenter that you want asked, please put it in Q&A. Everything else can go in chat, but I don't want to lose track of anyone's questions. So if you want to ask a question asked to the presenter, put it in the Q&A tab. Okay, I'm going to switch over, excuse me, to Bill's presentation here. Give me a moment. And I want to give him a moment here. I have to wait for the live transcript to go away so that I can give Bill control, and then we'll give Bill control.
This is the point where I worry about blowing up the internet. So
no, it's just if the live transcript blocks my ability to get to my toolbar. Yeah. So I have to not talk to it so that it goes away.
Oh.
All right. Bill, I've given you control of the slides.
Okay.
It's all yours.
Looks like we have a question already. Let's see here. Sharing the slides. I assume we do that.
We will be sharing the recording, and I will put that link into the chat.
Okay. Well, thanks, Teresa, as always. It's great to see you, or thank you so much for showing up today. My goal here today is, as part of the Business Basics series, is to give you a sense of kind of why you would think about the various forms of legal entities. We've tried to put a lot of detail into the slides, but you may have specific questions that you should feel free to raise as we go. If we can't get them in the moment, I've saved some time at the end for that. You'll also have my contact information either through Teresa or directly. So some of you I think I may have worked with in the past, but feel free to raise those questions. And We'll just, let's see if we can get started here. Okay, so again, the goal today is to just introduce you to these. We can't dig too deep, but I'm going to try to give you a sense of why you might choose one entity form over another, what they have in common, how they're different, some of the different perspectives, maybe from a tax advantage or otherwise. So, but one thing I want to emphasize to you, because I see this so often, is that people will connect with me because I'm a lawyer and I do the entities, and they say, well, I want to know what kind of entity to form. And what I want to emphasize to you is that the decision about the entity you form is actually a conclusion. It's not a premise. It's an idea that you reach, a conclusion that you reach after you've understood the kind of elements of your business model, not the other way around. You don't, when you have a business idea, there is almost never the need to form an LLC and spend $500 in Massachusetts right away. You need to make sure, and that's why we have so many great counselors at SCORE, that you've thought about your business model, you've tested at least at a certain level those underlying ideas, that so that you're satisfied that an investment in creating an entity and the right kind of entity is going to be money well spent and time well spent for you. So some of the things that we're going to explore in the context of these various entities are, who's going to be part of the program? Are you going to have more than one owner? Do you need to have any entity? Are you going to have active and passive owners? Are you going to have people who are investing that don't want to play a role in the delivery of goods or services that you're talking about? Where's your money going to come from? Is it going to come from revenues? Are you going to have investors? Again, do you need to raise funding through stock issuance and so on? How you distribute revenues to the people who are in the entity? Will you be distributing that as compensation for wages? Will you be distributing that as a partnership distribution or a stock distribution or so on? There are some tax issues. We won't dig too deeply into that, but certainly there are tax issues and tax advantages to some of the various forms that will be, or the various forms, I should say, that will be there. And then because some of these entities require that you be work authorized, we'll want to make sure that if you are going to be operational, that you're authorized to work in the United States. And some of the entities, particularly the S Corp, have limitations on who can own stock if you're going that way. So that's the general overview. Okay. So now I'm going to walk through them, and the basic entities, I'll give you a quick overview and then we'll kind of start into them. Is a sole proprietorship, a limited liability company, not a limited liability corporation. And then there's a subset of that called professional limited liability corporation. There are S corporations, which comes from what's called subchapter S of the Internal Revenue Service. There are C corporations, which is the classic big public stock issuing company. There are public benefit, or what are called benefit corporations. And then there are partnerships, which is another form of entity. And finally, we'll spend a few minutes on nonprofits, which is, they're distinct because of their unique tax status. So the first question is always, do I need to have an entity? And the answer oftentimes is maybe not just yet. Anybody can be in business. They can be a sole proprietor. They can operate under their, their social security number. They can engage in contracts. They can hire people. They can perform services for others. They can sell their goods without ever creating an entity. All right. So the first question for you is it time for me to create an entity? And we're going to talk about this a little more, but one of the issues would be, am I at a point where I have enough business that it merits me spending $500 to create an entity and pay that money every year, as opposed to spend that money on building my business, marketing, what have you? Or am I in a business where there are risk factors that I want to be able to create insulate myself from personal liability by creating that limited liability company? The one thing to remember, obviously, is that if you're a sole proprietor, and this is also true if you're a single member LLC, is that the income from your business is considered employment income. So you have to be work authorized in the United States if you're a sole proprietor or if you're a single member LLC. Again, sometimes we get folks in here who are on a limited H visa that's limited to their day job employment, or grad students or something. So if you ever have questions about that, feel free to contact me or some of my colleagues. So in terms of, that's basically it for the sole proprietorship. We'll talk again about some risk factors later. The most common form and the easiest form of entity for a small startup or an individual startup or a couple member startup is obviously the limited liability company. So just a few factors there. It's a very simple process to create. I send people a link from Nolo. Some of you may have received it. They have a great step-by-step. You can do it yourself online. It takes probably less than 2 hours or an hour to do, and you get your recognition very, very quickly. In both cases, from a tax perspective, they're what's called a pass-through or disregarded entity, which means that there's no tax at the entity level. And so the taxation comes to the individual member or the multi-members of the entity. So what happens is, if you're a single member LLC, you're going to receive your income, and some of you may be familiar with this. You're going to report that on Schedule C of your tax return, and it'll record your income and losses related to business, and then it'll join with the rest of your income. If you have a multi-member LLC, your entity will issue what's called a Schedule K, because that money will be treated like partnership income. And again, this is a conversation you would want to have in more detail with either a colleague at SCORE who can explain some of the pros and cons of that, or if you have your own accountant, that's a good conversation to have with them. Like all of these entities other than the sole proprietorship, one of the primary values of setting up the LLC is that there's statutory protection that if you run your business right, keep your separate books, keep your personal assets distinct from the assets of the entity, that you're going to be protected from personal liability. If something goes wrong, you're sued by a disappointed person a vendor or a customer or what have you. So that's an important piece of what we're going to talk about later in terms of what I call the kind of the three-legged stool of risk management. Let me see.
Yeah, can you repeat the link where you create the LLC, please?
Yes, it's called nolo.com. What I Google every time is Nolo set up LLC in Massachusetts. And it takes you, maybe just because I've done it, but it takes you right there. And it literally just tells you step by step. And I think even has links to every place that you need to go. You will actually go to the Massachusetts Secretary of State's website and go to the corporations page, and it'll just tell you how to set it up. It's very, very simple to do. And again, if you get stuck and you need help, I can and maybe we can send out the link afterwards. I should have put it in here, but we can definitely do that. Okay. Is this pace right? Am I doing okay for everybody? Let me know if I'm going too fast. So in addition to these kind of basic protections that all these entities are going to give us, some of you may be in a field where you have a you're in a business that has to be certified by the state. You're in a health field. There are related industries where you have to have a professional licensure. So for you, you may consider what's called the professional limited liability company. Again, probably a deeper conversation than we would want to have today, but we've had teams of doctors who want to get together and form a practice and so on. And so the benefit there is that even though you're all practicing under the umbrella of this one entity, you're protected from liability if one of your partners or colleagues commits malpractice. So it gives you that extra insulation and protection if you're in one of these fields that qualify for that. All right, so just moving ahead to kind of, again, move through these rather quickly. The S corporation, again, for subchapter S of one section of the Internal Revenue Code, is an entity that is set up like a LLC. It's only taxed at the individual level, so there's no taxation at the corporate level. In terms of your business model, it gives you some flexibility to capitalize yourself differently. And one tax advantage, or probably the main distinctions between this and the LLC, is that you can actually raise capital through the issuance of stock. And so this is non-publicly traded stock, obviously, so there are some limitations on that. But basically, you can go up to 100 shareholders in the company. You can issue stock as long as they are individuals, no corporate ownership, and they must be US citizens or permanent residents. So a lot of times you may have people, there's a lot of ways to bring capital into a company, but this is a way where you can formalize equity positions in a company by issuing that stock. Let me go back 1 second, because I realized if you have, just for a second here, if you have a multi-member LLC, one thing I think I forgot to put in there is that we'll want to make sure that you have what's called an operating agreement, which is a document that formalizes by contract the terms between the members of the LLC, to make sure that you guys are clear among yourselves about what the capitalization obligations are, what the rights are to take money out of the company when it starts generating profits and so on. So that's another piece to think of there. Going back to the LLC, the benefits of the S corporation from a tax perspective is that you can kind of split the income that the entity is generating. Some of it can be treated as employment-based income to the people who are actively working in the company, and depending on the tax status of the company, you may be able to treat some of the income as distributions to shareholders or partners. And this is a conversation you would want to have with accountants. Accountants often like this model because they can see that your revenues are going to be such that you'll gain a tax advantage if you treat yourself as an S corporation. And so, again, that's a more detailed conversation than we can have here. And another little nuance here you can talk to our people about, or you can talk about with people who are your accountants or your professionals, is an LLC can also take what's called an S corp election. So if your early years, you're an LLC and you don't think there's any tax advantage, but as your revenues start to grow, your accountant or you feel like it's time to do that, you can actually tell the LLC, the IRS, I'd like you to treat me as an S corp, and then you get the benefit of those tax advantages that are worked into the tax code. Let me see if I can. How does taxation work for the individual when an LLC? So Jackie, if you're an individual LLC, it may be what you're doing if you're already in business. So you're going to record your income on Schedule C if you do your own through QuickBooks, or I mean TurboTax or whatever. They'll, as part of their questionnaire, they'll ask you, do you have income from self-employment or business? And you'll fill those out, and that will populate Schedule C. And after all of your expenses and revenues are matched up, any excess revenue will show up and join the rest of your income as personal income. So that's how that would work. Let's see here. So anonymous, all members of, if you have multi-members of an LLC who are not work authorized, they cannot receive income. So all of their distributions would have to be partnership income. So they can't work for the company and receive income that way. And it would raise a flag if you, so you'd have to be a passive member is the way I would put that. So yes, you can own an LLC as a non-work authorized permanent citizen or citizen or permanent resident, but your income has to be treated differently. And that's a conversation you would want to have with, we can talk to you about it some, but you would want to talk to your accountant about that as well, because you may have income from other sources. Does that answer that question for you? No open questions. Okay. All right. So that, I think that covers the S. So here is the first major distinction between the corporation or the entities that we've talked about and some of the other ones. Is we're all familiar with the C corporation, which is, again, big corporations typically issuing stock publicly. There are certainly times when that model makes sense. Very rarely, may I say, does it make sense with the kind of people who SCORE tends to work with. And there are certainly a lot of online companies that offer to help you set up an entity that might inadvertently push you in this direction. So it's, again, back to the point of what's my business model. The first thing you need to know, obviously, about a C corporation is that the corporation itself is going to be taxed. And then revenues that fall down to the owners of the corporation as shareholders or principals are also going to be taxed on their revenues. So there is a flat rate corporate income tax, but you're imposing a double drain, if you will, on your revenue stream by creating the C Corp. The benefits for a C Corp, and sometimes this is when companies are a little more mature in their life cycle or at a bigger scale, is that you may be capitalizing yourself with money from venture firms or other business entities. And because the S corporation can only issue shares to individuals, if you have interest in being capitalized or people interested in capitalizing you, that where the shares would be owned by a different corporate entity, a non-individual, then they may ask you to or require you to convert to a C corporation. So if you get that, I suppose it's good news that you've got major money coming in and that there's interest there, but it may be something that we don't need to rush to right now. Eddie, yes, a foreign person can open a business in the United States with that limitation that I told you, that you can own the business, but you can't work for it unless you're work authorized. And I think the other question was pros and cons, James, of a PC versus a PLLC. The real big one is that limitation on intra-member liability for malpractice. So if you're in a position where you qualify as one of these businesses that are regulated by the state, you have to be certified like physicians and dentists and so on. then if you and the other dentists, I'll say in the group, if one of them gets sued for malpractice, you're not, the PLLC structure will limit your liability there and only have the one particular physician or whatever dentist be liable for that. Okay, no open questions. Okay. So there's our C corporation. I'm not looking at the chat questions. Are those just on other subjects, or should I be looking at those too?
Oh, you're fine.
Okay,
You're doing
thanks.
good.
Okay. Good. So another alternative here, which is kind of a variation on the PLLC that we just talked about, is to create a professional corporation. So again, the same kind of entity where we're in people that are in fields that the state has recognized as professions that typically require some sort of registration or certification, but you're setting up the structure as a corporation. So you're, again, going to be subject to that double taxation. And again, you can't get too far into this in a thing like this, but there may be reasons. Law firms, for example, back in the day, accounting firms used to set up this structure for a lot of reasons that, made sense, but it really requires a very sharp look at your revenues and where your money is coming from to know which of these are better. And again, I think for almost every situation that we're going to see here at SCORE, this probably is a less efficient tax option than even a PLLC, where you can skip that level of corporate taxation before you're taxed at the individual level. So I don't know if any of you are familiar with the benefit corporation. It kind of crested a few years back. It was a big thing for a while, and I'm not sure that people are really doing them the way that they used to. Jackie, I think the corporate rate is 21% at the federal level, but that's just the last time I looked. I can't say. You probably could Google it in a minute. I think with the changes in the tax law, they did make that at one level, but I don't remember if that's still accurate. The benefit corporation was set up for the following purpose. If you have a corporation with shareholders, the kind of statutory law and the common law require that the corporation act in the best interest of the shareholders, which in shorthand kind of translated into maximizing shareholder value. So paying employees too much, having too rich a benefit package often led to lawsuits by large blocks of shareholders saying you're spending too much money, that on the company, you can deliver this service, you can generate more profits, which will generate more value for my shares that I hold. And so people, legislators and others realized maybe that's not the best model, or at least we want to insulate some people who want to run a business that maybe tries to balance the value to their employees, to the communities that they're working in. Maybe they think more about environmental issues or what have you. So we're going to take a little what would otherwise be profit and turn it into these other things that the legislatures have determined have more of a public benefit. So when we look down here, that plays out in this state, and our state kind of models what's called the Model Public Benefit Corporation Act. So there are many states, over 30, I think, at this point, who have adopted this. So the three things that happen if you decide that you want to do this is that you have more discretion to decide what's in the best interest of the company as opposed to the best interest of the shareholders. It does open up, in terms of more formal reporting, more transparency, because you have, in order to get this status, you have to be able to put more of your financial information on the table than you would as a privately held company where, typically, unless you're publicly traded, your tax returns and so on are not available for the public. But if you want to go down this path, you have to do more formal reporting about how your, your assets and your resources are going to benefit this publicly approved mission. And so there's more accountability there for you too. So you open the door to a little bit more transparency, a little bit more regulation by the state. And so it's just a function of how you want to do this. And again, this is more really an issue for not if you own your own company, obviously, but if you have shareholders, whether publicly or privately held stock, who would otherwise say that you owe them a fiduciary duty to maximize their returns here. So that's those. A partnership is just kind of another iteration of a multi-member LLC. It's a group of people who get together. And again, we would be working off an operating agreement, which is that contractual document describing the rights and responsibilities of the individual partners. Like the LLC, there is no taxation at the partnership level. So the taxes are going to come through. There's a million ways to do this. Certainly, I'm familiar with law firms now where they have equity partners and contract partners. So they can be a little complex, again, for a lot of the entities that we have. But if you're thinking about a pure partnership or even a partnership perhaps with active and passive members, we can start you down to be thinking about that path and help you decide, is this, an option that is one that would be worth exploring for you. And so I know I'm moving through this quickly. I hope it's being productive. So I'm going to jump now for a minute and then to nonprofits, which are two things. So let me get the language straight. You're a nonprofit, which is a status recognized at your state level. So the nonprofit, just like any of these entities, first requires that you go through a process of submitting paperwork to the state that says, yes, we agree that this is the charitable kind of work that we think the state should be doing, and we're going to recognize that. And just like if you go to nolo.com and Google set up an LLC, you can Google the same thing for set up a nonprofit. And we have a ton of great materials, but in terms of a step-by-step about what you do at the state and the federal level, it's a great little step. I think it's cheaper than filing for a for-profit entity, but there's still a filing fee associated with that. Those of you interested in nonprofits, of course, will know that you can make a lot of money at a nonprofit. You can be paid a lot of money. I always remind people that Mass General Hospital is a nonprofit, and their CEO makes a couple $1 million a year. So you can nonprofit is not a business status, it's a tax status, but you can't distribute profits to the individuals. So when a nonprofit, money that might accumulate, say in an endowment like at Harvard University, doesn't get distributed to the individual members. So people often think they can kind of avoid the the taxation by creating a nonprofit, but take the profits out of the company. And you have to explain to them that that's not available. The other issue, and then I'll talk a little bit about what happens at the federal level, is that because you are given this special status as a nonprofit, your financial records are going to be publicly available. And they're going to be available two places. One, as I indicated here, you'll file an annual financial form with the state called Form PC that anybody can look at. And you'll file a similar form of varying degrees of complexity at the federal level called the Form 990. So the trade-off is you don't get taxed and you enjoy some limited liability for the institution in terms of, in most cases, the charitable cap for an institution being sued is $25,000 as opposed to a for-profit. But again, you are limited in terms of where your money can go, your salaries, and you're limited and your, at least your books are open in a different way. So once you get your state recognition, the next question is, which you can do and never file for federal tax exempt status. So the tax exemption is going to happen at the federal level. And what happens there is that through, depending on the size of your organization, either a very quick application process or a longer application process, you're going to file for recognition as a typically what's called a 501c3, which is one of 7 or 8 categories of tax exempt organizations. Some of the other ones are like labor organizations and supporting organizations. But for the bulk of what we see, people have a mission, they have a charity, they want to do some good work, you're going to be under 501c3. And if your entity is starting up or you're looking like you're going to be under probably $50,000 a year in revenues, small local nonprofit, you can use what's called the 1023-EZ, which is a very simple expedited form where you submit the material. There's much less required of you. And the IRS pretty much takes you at your word that what you're saying is true. They may audit you in years to come, but there's not a lot of scrutiny. So the turnaround is much quicker. You get that recognition from the IRS. And among other things, obviously you're exempt from taxation, but it allows you to solicit donations that can be deducted from the donor's income. So this is, and it's also attractive if you're in a situation where you're trying to raise money from foundations or other charities or corporations. They often want to see that you've gotten that recognition, in part because that's who they want to support. So it's an important step, again, back to your business model. If part of your revenue, your business plan for revenues includes donations, particularly from entities. One thing I'm sure you've all experienced is that with the change in the tax law, individuals lost a lot of the opportunity to get a benefit from making a donation individually because they raised the deductible so much. So, now you have to, most people don't give that much anymore that they get to that point. So if you anticipate being bigger or your goals change or you are more successful, then you might have to file what's called a longer 1023-Z. And again, we have people to help you walk through that. It's a more detailed process. The application is longer. You want to have a more robust set of bylaws and so on. But that's it. So let me stop there. Any questions on that? I'm going to now kind of talk through a few of the other little basics of this. But if there's no questions there, I'll just keep plugging along here. Okay, so there are a couple things to think about here. Most of you, I'm assuming, are in Massachusetts, but as Teresa said, we serve people from all over the country, and you may be working in more than one state at some point, or maybe you're out of state now and thinking about moving in. So one of the first questions you want to ask yourself, pardon me, is where am I going to form this entity or where am I going to register it? And many of you may know that, Delaware is a huge center of corporate registrations. But let me tell you that the reason that Delaware was such a popular state was many, many years ago. They had the best kind of system of statutory law on regulating business interactions. And so they also had a great body of judge-made law, case law, to explain what the rules are. So big corporations that wanted to make sure that they could predict what their contracts meant and what these terms meant would all choose Delaware, so they didn't have to worry about the rules of the game if they were in Massachusetts or some other state. That's not true for Massachusetts. We have a very sophisticated set of laws now. We have a very well-established set of judicial opinions interpreting those laws and interpreting what contracts mean. So if you're doing business in Massachusetts, there's exclusively, let me start there, there's almost no reason for you to create a Delaware entity. And the reality is, if you create a Delaware entity, and you're going to have to pay to be in Delaware, and you're also going to have to pay to register under the foreign qualification in Massachusetts. So you're going to incur two sets of fees and maybe two sets of tax burdens at the state level related to doing that. So if you're just in the forming stage and you're working in Massachusetts, absolutely no reason not to form here. If you happen to be in another state and you're moving in and you continue to do business in the other state, then you would do what's called foreign qualification, where you would say, yes, I'm a Nevada corporation, but I've also doing enough business in Massachusetts that I need to be recognized here. And so you would just do that, and you would incur that additional $500 or $600 a year as a filing fee. But again, if your business model is only here in Massachusetts, absolutely no need to ever go to another state, and particularly Delaware, which just seems to load a lot of fees on there. So just quickly, if you're doing the process new as a startup, regardless of the entity, S Corp, whatever, there's a site on the Commonwealth's website, Secretary of the Commonwealth's website, where you can go in and check to see if the name that you like is available, and you can reserve it for up to 60 days. So you put your stick in the sand there, and that'll give you some time to go ahead and create that entity, which again, in almost every case, is an incredibly quick process. Okay, so if you're in Massachusetts and down the road operating from another state, the issue is, when are you operating? If you send a consultant up there once a month to do a job, you probably don't meet the state's definition of operating. But if you have a physical location, if you are doing recurrent business in that state, you've got consultants up there, as part of your normal business, and we can always look at the statute for a given state, then yes, they will expect you to register in that other state as well. So you would do kind of the flip side of what we're talking about, which is you would say, I'm a Massachusetts entity, but I'm doing enough business here that I want to be recognized, let's say in New Hampshire, and you would do that as well. So just jumping down here, a lot of questions come up when you're filing your application for recognition as a business entity about what a registered agent is. So a registered agent, really, they can play two purposes, but the sole one that the state cares about is that they have a place to go to, or somebody that wants to sue the entity has a place to go to that they know somebody will be there, so that they can contact you if the state has an issue, or that they can serve you if there's a civil matter that's coming forward. So you can name yourself as a registered agent, and some people do that. Some people don't want to list their physical address, which is required. You can't use a post office box. But there are companies that I've sent a lot of people to. I don't know if they're any good or not, but if you just Google registered agent Massachusetts, there's one that comes up in Pittsfield all the time that I've sent dozens of people to, and as far as I know, they work fine, and it's $49 a year. So if the unlikely event that somebody wanted to contact you, that registered agent would get the form and they would say, oh, we got this. And they would reach out to you, but nobody would see your physical address, which some people like to protect. Registered agents, big ones like CT Corporation, also will do your annual filings for you for a fee and so on. My only suggestion to you is, I don't know what NOLO service cost if you want to pay them to do your filings for you, but sometimes money is an issue. And all I would say to you is that if you're smart enough to run a business, I'm almost sure you're smart enough to do this for yourself and save yourself that money. And again, look at the NOLO website. Is getting an EIN from the IRS a prerequisite for opening an LLC? Not for a single member. So you may get it and you're not required to, but for a multi-member, yes, you have to. Okay, so here's a few other thoughts here. As I mentioned, if you're going to be in a multi-member entity, you want to, and we have templates and there are plenty of them online and we're here to help you think through these, but you want to have an operating agreement which is independent of anything you would file with the state, but it's the contract between you and the other members of the entity, spelling out exactly what's going on here. Bylaws are certainly required if you have a nonprofit. And there may be bylaws required if you have this or a stockholder agreement. The subchapter S, I think we talked about, have your accountant weigh in on that if there's some tax benefits given the particular level of revenues that your company is receiving. The EIN, again, not required for a sole member LLC, but it's a form that lets you use something other than your social security number for business transactions. It's a number that you can put on your separate bank accounts that you're going to set up for your entity if you go that way. And we didn't talk about this before, but let me just explain for you briefly that the DBA is a doing business as, sometimes it's called a business certificate. And this has no formal impact. You're not creating an entity, and you can be a DBA as a sole proprietor, no business entity, or you might have an LLC or another business that has more than one line of business. You've got a landscaping business and you've got a yoga studio. So what you would do is you go to the town in which you're operating and you say, I want to register and explain to the world that I have a business alias, which is what this is. It's another name, and that I'm going to say, even though my LLC is Hulsey Enterprises LLC, my yoga studio is Laughing Dog Yoga Studio. And so I'm going to have a business name that's listed under that DBA. So again, it doesn't create any business entity, but it discloses to the world that you're operating under this name that you list in the DBA. Okay. So I think we're through our hour. Are there any other questions or any feedback that you have for me about how I can make this better? Please share it with Teresa. And thanks for coming, I guess, if there's no other questions.
I do not see any other questions. So
Okay.
Yeah, we'll just thank everyone for coming, and thank you, Bill, for taking the time to educate us all on business entities.
You bet. You
All
bet.
right. Thank you.
See you guys. Yep. Bye-bye.